Let's talk about how you can trade crude oil futures LEAPS. It's simple, it's pretty safe, and you can make quite a bit of money with it, especially with a pretty high win rate of probably over 97%. Now, these are the how to position sizing and management and when to do it. So, for the how, it's only going to be short puts, delta 1 to delta 10, and we will need to analyze the graph, and we'll go over an example in a second. It's very simple. And the reason it's only going to be short puts that we are going to be selling, this is because specifically commodities, they crash upwards. So if anything crazy would happen in the world, the price will probably shoot upwards, which will be a positive for us because we are selling a short put. So you want to kind of keep that in mind, and it can really help out in the future. Again, this is only because commodities, they crash upwards. Everyone wants cheap commodity pricing. Nobody wants to pay high prices for commodities. For the days to expiration, it's going to be about 365. So basically a year. For the position management, I mean, this debatable. That's how I prefer to do it, is to take profits at 50% of credit, and you can do it fairly quick. You don't have to wait half a year or whatever to get half of your profits, and this way you can kind of renew the position and go again and again. For the risk management, and it's very important, you will sell the futures contract if the price reaches the short put strikes. Now, when you do that, you basically eliminate the risk to the downside, but it's really important to keep the position sizing very small. Otherwise, you would not be able to do it. Your account will take too big of a hit if you open too big of a position, and you won't get to the point where you can even protect your position by doing it. So this is a bit advanced. It will yield a way higher win rate. Profits will be a bit lower, but it is overall way safer because the position size is pretty small. So it's 1 to 2 contracts per every 100K in the account. So I will probably be very conservative, and I will go probably 1 contract per 100K, but even 2 is not going to be too crazy. And when to do it. So this is the big one. So it's probably best to do it when if the price is a clear side trend or an uptrend, basically anything other than a downtrend. So let's take a look at an example. So this is a crude oil contract for August 2026. So it's about a year from now. And obviously there's not much volume in it for the future itself. But crude oil, overall, if you look at any other graph, it's been basically going somewhat up, somewhat down, but overall pretty sideways within a pretty big range. So basically we don't see any down moves or any downtrends, big ones at least. So let's go again for crude oil, and this is the contract we're going to be looking at, crude oil August 2026. Now, what strike would I choose, right? So obviously I want to be, again, as safe as possible, and I really want a high win rate and keep my position small. So for myself, it's a bit hard to see, but I would probably go to a strike of 38. You can see the price has been in December 2020, it's been around 42, close to 41. So if you go to strike 38, you know what? Even if you go to strike 40, it's still gonna be completely fine. And if anything happens, we can just sell the future itself at the strike if the price ever reaches it. But obviously this is an insane drop in price, and if that happens, then I think many things in the world are gonna be solved because energy will be pretty cheap. Now it can happen, obviously price can go down, and this is why we need to have a plan, and to begin with, to make any kind of defense work on a position of this magnitude, you need to keep it small. So at strike 40, I will definitely go 1 contract. You can see it's pretty safe, and you will have a pretty high probability to make money on it, especially if you take profit at 50%. So this is the cycle closer to 365 days, so 347 days here. So if you go to the put strike at 40, let's see what we get here. So 40 is delta 8. Now there's not much volume here. Well, there's a little bit of volume, But the bid and ask spread is overall pretty good. Obviously it can be better. So when you open the position, you'll be probably down like 5% right away because of the spread. Again, which is not a big deal. They are not as liquid as obviously closer expiration options or maybe LEAPS for stocks. But nevertheless, the market makers are in here to provide liquidity. So it's not going to be an issue unless, this is a $100 million fund trying to trade this kind of stuff. Then it might be a bit different. But overall, you can get about $1,000 in credits, probably a bit more, $1,060, $1,050. So that's pretty good. And margin requirements are pretty small. So this is something, to supplement current strategies. It's not something to replace them, obviously. And you can have a 94% chance to keep the $1,000, but we will take profits at half of this, which means it will be around 97%, give or take. And based on the theta, we should be getting those 50% within probably close to 100 days, give or take. And again, this is not something to revolutionize your profits, but it will be pretty nice to make 0.5% here, 0.5% there. Maybe you take 2 contracts here, right? If you take 2 contracts, you already gonna go up. Or if you have your own like defenses or your own stop losses systems that you want to use in the situation, then you can obviously deploy it. And then obviously you can maybe open more contracts. I wouldn't. I really want to keep it safe. Not sure why it's not loading. Let's see here. But yeah, here we go. So 2 contracts will yield you $2,000 on every 100K. So this is it for this video. Hopefully it was somewhat useful. I probably would do this trade right now, given the geopolitical situation. And you can probably quite quicker than those 100 days, which is quite nice, and especially the amount of capital that I work with. Even 0.5% or extra percent here and there is just it's a huge difference, and it's very welcomed for any investor. So this is it for this video. Hopefully it was useful. I only try to bring very quality content the best way possible. I'm very conservative in my trading, and I do aim for a really high win rate, low stress, and really good risk management if things gonna go sideways. So far this year, making of this video, I'm up 21%, while the market, I think, is up like 6%. I'm up with no losses and basically being out of the market for the majority of the year by picking and choosing trades just like this one. So again, thank you so much for watching, and I will catch you in the next one.